let's talk about trading systems, okay? And I'm going to tell you why I really don't like mean reversion systems. They're really difficult to make work, where trend following systems are so simple and easy to work. And I think this is going to be valuable for you as a systems trader and even as a discretion trader, because for whatever reason, retail gets enticed and fooled. There's so many ways you get fooled and bamboozled as a trader, but you get fooled into thinking that mean reversion is a good idea, which can be buying the dips, but is also trying to time the tops and sell the tops. So mean reversion trades and trend following trades are almost opposite. So you should know that the largest managed money in the world is run on trend following systems. The first computerized systems from the 1970s were trend following systems, and in the 80s became extremely dominant through the turtle trader systems, and they've only continued. These systems have not stopped working. Essentially, what the modern trend following systems do is, for assets like gold or the stock market or Bitcoin, they buy new highs. And they hold with no stop loss. They hold with no take profit, with a very wide stop loss. So they buy a new high with a wide stop and no take profit, and then they end up selling. If they take new entries, their stop loss advances, and eventually they get stopped out, or they get stopped out, or they close in profit if there's some conditional close, maybe like a new 15-day low, a failed breakout, something like that. So these systems still work today. My main simple system, MTP, Market Timing Pro, is a trend following system that follows these principles. It's incredibly profitable over the long term, and because the stops are so wide, you get to ignore all this market noise, have a super high win rate, and it works great. Now, mean reversion, so again, trend following, you're buying a high price. Mean reversion, you're either buying a low price or you're selling a high price, with the idea that price is too high, it's a dear price, it's a expensive price that's going to come back down, and a low price that's going to come back up. So there's a lot of problems to this, but you see it in the system results. The systems don't seem to perform that well. You can make profitable mean reversion systems, but it's much harder, and they're usually not as good as trend following. I don't know anyone who got rich on mean reversion. I know plenty of people who got rich trend following. They bought the stock market, they bought Bitcoin, they bought ETH, they bought Solana, they bought gold, and they just kept buying and they held. I know lots of people who got wealthy doing that. I don't know a single person who got wealthy. Yes, I sold the top of the market. I just went short, and then I bought the bottom. Not to say it can't happen. And there's people who have done those trades, but they tend to lose money along the way. So the system, a mean reversion system, would look like selling a high price and buying a low price. Usually there's a stop, and there's almost always a take profit. There's a lot of problems with it. I'd say there's two main problems. The first problem is that as price gets higher, you want to sell more, so it's hard to use a stop loss. And as price gets lower, you want to buy more, so it's hard to use a stop loss. That leads to blowing up. The profitable martingale systems, which add to losers, that double down on losers, are mean reversion. You cannot martingale a trend following system. You end up pyramiding, adding to winners, which is much more profitable. It doesn't risk blowing up. So it's a pickle with the mean reversion of where do you set your stop? Do you use a stop? Do you set a stop? Do you think price is going to come back? Sometimes it never comes back. Now, when you're trend following, you never have this problem because you have like a built-in filter. Because you only buy a high price, you're never in a scenario where the bottom's falling out of the market and you're on the wrong side of it. It never happens. You end up just not trading for long periods of time. And a lot of the good trend following systems, they don't just trade one asset. There's a whole universe of assets you can trade from. If the stock market's in a bear market, gold might be in a bull market. Crypto might be in a bull market. Specific sectors might be in a bull market. There's high prices that you can buy. They tend to go higher. Now, the second problem with mean reversion systems, the second main problem with mean reversion systems, so the first problem is the filter. The second problem is to take profit. Because when you're selling the high in the stock market, you're not thinking it's going to go down forever. If you're trading mean reversion on Forex, you know it's not going to go forever, so it's usually a smaller take profit. Now, the risk multiple can still be multiples. However, when you're trading a trend following system, you have unlimited upside. Sometimes you're going to buy something with no take profit, and it will run 100R. And you didn't know it would, but it did. You buy Bitcoin at $3,000 and it just keeps going higher and you never sell because it's never making a new low. So, whereas trend following systems are exposed to trades with unlimited upside, mean reversion trades are sometimes exposed to unlimited downside. And mean reversion systems don't have unlimited upside ever. Or basically rarely. I mean, you buy the top of something and say it's going to go to zero. So, I'm a fan of trend following on all time frames. When we short crypto, we don't short high prices, we short low prices. Why? Because I don't want to be shorting an uptrend, ever. I don't ever want to be in a situation. So, mean reversion, you need these filters, like, oh, if it's prices in an uptrend, I need these filters to keep me out of the market. Trend following is a built-in filter in the entry. You do not sell a rising market because it's not in the, you only sell low prices or you only buy high prices. You don't need a filter to stay out of the bear market because you're only buying high prices, right? So you need these complicated filters to try to like filter, oh, we're going into a trend phase so we can't do mean reversion anymore. I know I wasted a lot of time trading mean reversion. It's much less robust, it's much harder. It's much harder to make work. It's much harder. Momentum strategies are unlimited upside, limited downside, and there's a built-in filter to your system to keep you out of being on the wrong side of the market. Now, you still lose sometimes. You lose on failed breakouts and failed breakdowns. But if your stop is wide, you're not shaken out by noise. It's legitimate. Price makes a new all-time high and then fails immediately. It's just not very common that happens. So I really encourage you, and I didn't know this, I wasn't informed on this. Actually, intuitively you know, because when you get into the markets, you want to start buying and investing in dollar cost averaging. And usually the life cycle of a trader, you get into these trading systems and you want to make money today, so you start doing some kind of reversal patterns or systems. But it's just much less, it's just so unlikely to work, it's just so bad. It's a waste of time, and I wasted a lot of time doing this, and I'm making this video so you don't have to. So if you guys want help, you can always start with my system. But I always encourage you to, nobody reads anymore, but if you read the book, The Complete Turtle Trader by Michael C. Covell, it's called The Complete Turtle Trader by Michael Covell. It covers trend following and why it works and the history of it as a computerized system and real life results. So you don't need to just take my word for this. I mean, intuitively it makes sense once you understand the market and systems. But anyways, I'm back home and I'm gonna eat. I went out for food, so hope you find it useful. Much love. Peace.